the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish, but you don't own anything.
A significant amount of fictitious wealth has just been erased by the market, which may be a good thing. The real worth of cryptocurrency is going to be tested as speculation fades. This is the most recent viewpoint from Raoul Pal, CEO of Real Vision. Pal claims that excessive speculation, careless leverage, and unsustainable gains that had to be eliminated were the main causes of the recent severe reset in the cryptocurrency market. A much-needed new beginning has been made possible by the failure of overly leveraged projects and the withdrawal of easy money investors, which has shaken out the weaker hands. Institutions are still apprehensive and are delaying bigger investments until the regulations are clearer. Still, a stronger foundation is starting to take shape in spite of the remaining uncertainty. In an economy that is becoming more and more unstable, many people believe that this reset is their best opportunity for financial security. Stay tuned to the end of the video, where Raoul Pal explains the implications of this reset for the cryptocurrency market, the current state of Bitcoin, and what to anticipate in the coming months. Consider liking or subscribing to the video if you like to keep up with financial news. It's free, and you can always change your mind. Here is Raoul Pal's most recent crypto outlook.
The answer is we don't know yet. We know they've got a lot of work. We've heard that the whole working group fell apart because, typical of crypto, nobody can agree with each other. It's like, so, roll your eyes with like embarrassment about how bad this space can be. But that's where we got to. And Trump's like, I've had enough of all of you, get out. Let's start this. Now, David Sachs is a smart guy. He's got the ear of Mark Andreessen. They kind of, there's a lot of smart people around the space who understand digital assets. We know we've got to get stablecoin regulations first. That's what they've talked about. So that's a big one because it's a large bar of US debt. So they want that. Then we've just got to get the general framework, and then we've got the strategic reserve. It's all going to come, but it is going to take time. David Sachs has got the enviable position of trying to figure out some regulation for AI, which is much harder than crypto to figure out because we've got something much larger in terms of humanity scale impact. So look, they've got a lot of work to do, but we need something at some point soon that starts laying foundations. I think the first thing would be stablecoins. Yes, I think it's a big deal for this cycle because when I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed. Now, they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology. But it's still not easy enough for corporations to do this with ease. So, look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So, yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course, they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute Supply Manager survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People can put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish, but you don't own anything. So I think let's see how it plays out. But I think it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle, because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which will be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong. But you've got to remember how money works in the economy. Right now, there's all of these pension plans and all of these private equity funds and all these VC funds. They've had no exits. Nothing has gone public. Things like Stripe, still not public. In the crypto land, Circle, still not public. Kraken, still not public. So that we need to see the capital markets open. We need to see money get recycled, and then money can move through the system. So that's one of the issues. So a lot of the crypto-based investments is from the crypto market that releases as the capital goes higher. But of the traditional investors, there's still not enough money. So we're having to bring in new capital, and that might be the Middle East or a couple of others. But we're not getting the traditional investors fully involved. They just don't have money right now. And that's a function of what I talk about when I talk about the business cycle. The business cycle, if you think about it, when the business cycle is expanding, it means people have more earnings, whether it's at household levels or corporation levels. Those profits and earnings get recycled into investments. And that's what drives a lot of this. So we're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further. So I only see acceleration ahead, but it just takes time.
Pal highlights that the Bitcoin cycle is part of a broader global economic shift, and that liquidity is just now starting to recover. The full impact of these changes might not be felt until 2026, and volatility will persist. While other assets find it difficult to keep up, Bitcoin continues to show its resilience in spite of this. Even though this cycle might deviate from past trends, one thing is certain: Bitcoin survives while everything else struggles to stay afloat. Let's return our attention to Raoul Pal as he offers more insightful commentary.
I kind of knew this one was coming. We'd heard rumors about it. Dave Portnoy as well. It's just been this endless cycle of people who are trying to capitalize in on this. Okay, fine. The issue being is that everybody's getting destroyed by this. So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap, and then maybe they go to $1 billion. And people had a real chance. And then more and more issuance came, and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5, and then day 3, and then day 2, and then hour 5, and then hour 2, and then hour 1, and then 30 seconds after launch. So they've got faster and faster and faster and faster, and more and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some things, some memes will survive because memes survive all of humanity. So Doge has lasted since
Right.
2013. So some stuff will survive, but I think what we've done is hyperscaled this cycle, destroyed all of the excess gains that were possible, and that's hopefully the end of a lot of this. And
Do
we
you
can then
think?
have a cleaner market. Most of these people are not us. So these are younger people with no chance of buying a property
Yeah.
who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism, or to put it in a more positive term, it's a more speculative economy because there are opportunities there and they need the opportunities to leverage.
Hmm.
So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine.
Yeah.
But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. But I think you're right. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. Although
Yeah.
we did see it, to be fair, Paul, we saw it in NFTs.
Well, that's a
Right,
good point. Yeah. Yeah.
we had this market of like high end art that did really well. Then the PFPs, and then there was millions of PFPs,
Yeah.
and the whole lot went to zero. And by the second cycle, we can see that punks retain value and bored apes retain value and pudgy penguins, but a
Right.
whole bunch of them don't. So I think it's the right process. The creative destruction cycle in crypto is very fast and very brutal, and
Hmm.
that's maybe a feature, a, you know, a
It's a
benefit.
feature, not a bug.
That's right. It's a
Yeah.
it's a feature, not a bug. I think probably.
Yeah.
So it is a category. So how we create network value is either by number of active users, or it's also the total value transacted on a particular chain. That combination explains the value of these networks. So Bitcoin has big size transactions and a lot of users, which is why it's the most valuable. ETH has smaller size but lots of users, and it all flows from that. So real world assets outside of stablecoins tend to be larger single transactions. If you're going to take a slice of a bond, or credit or something like that, it tends to be you stick in $100 million because you're a financial institution,
Hmm.
and you don't do any more than that. So it's a high value, but only one or a few nodes in the network are using it. So yes, they're good, but they're not everything. So they add value. Gaming, on the other hand, much smaller values, gigantic volume size.
Hmm.
So there is a balance between all of this. Now, over time, we will see the entire financial system go onto blockchain rails anyway. So it's not just the tokenization of real world assets, more so the hyper efficiency of putting equities, all bonds, everything on chain as an instant settlement system, proof of ownership, custody. You get rid of so many middlemen. So that's
Right.
coming, and those markets are trillions upon trillions of dollars. So yeah, it is important. Gaming's important from another perspective because that's one of the large communities of Web 2, social media being one, gaming being another, music being another, sports being another, that will eventually migrate across to this world. And all of those come with like 1 billion users plus. I
Yeah.
mean, a big game can have a billion users, a big pop star has a billion fans, a big sports team has a billion fans. So these are very big things.
Pal claims that the market is currently burning itself out because the cryptocurrency craze has reached its breaking point. What started out as a gold rush with enormous profits has turned into an overcrowded mess where bots and insiders are leaving quickly, leaving very little space for actual profits. The days of easy wins are ending, even though some of the original meme coins, such as Dogecoin, will endure. This cycle of speculative destruction is not new. With NFTs, for example, only a small number of collections retained their value while the others vanished into obscurity. Despite the harshness of this hype, overproduction, and collapse process, it is essential. Only what genuinely has value remains after the weak are filtered out. The market is clearing itself, and the future will be based on more solid groundwork. In the end, those who are able to identify this change early on will prosper. I hope you found today's video useful and enjoyable. As always, best of luck, and I'll see you in the next one.